What's up, YouTube? FD White back with another episode of FD White Invest. Welcome to the channel, man. Welcome to the channel. So, happy 2025 or happy New Year. We made it. We made it. Life is more important than money. Life is more important than crypto, stocks, whatever you're doing. Take some time out, hug your family, thank whoever you thank. To just sit back and realize you made it another year, man, because a lot of people didn't. So without further ado, let's jump into what I want to talk about today. If you don't know me, I go by FD White. I've been in crypto for about 4 years now. This will be going into my 5th year. The end of this year, well, the end of 2025 will be year number 5. So I have a little bit of experience when it comes to the markets, when it comes to how to regulate emotions, how to regulate, or how to, or psychology, for a better term. So I want to give back some of my knowledge and some of the things that I've done over the years, the good and the bad, because I do think 2025 will be I do think it's going to be a good year for Bitcoin. I do think it's going to be a good year for investments, crypto, but I do think it's going to be a lot of ebbs and flows. And these ebbs and flows can mess with your mind. They can mess with your emotions. They can mess with your psychology. So I want to talk about that today to gear you up for what I do think is going to be a roller coaster year in 2025. And with the help of AI, Chat GPT, we're going to go over some key points as to discuss this crypto bull run psychology. So what I want to start talking about first is FOMO. FOMO. So I know if you've been in crypto, we all get it, no matter how long you've been in crypto. And mind you, this video, I haven't rehearsed it. I haven't, looked it over really. This is coming straight from the heart, straight from the mind, because I think this will be a lot more genuine if I do it this way. So lots of people FOMO. And FOMO is not really a bad thing. Sometimes you can FOMO in at the right time, but a lot of times FOMO happens at the top. FOMO happens at the top. And we all know crypto is very volatile. So how does FOMO drive irrational buying behavior? We have strategies to resist impulsive decisions, and we have historical examples of how FOMO has impacted past bull runs. We can say FOMO is one of the most prevalent psychological drivers in a crypto bull run. When the price goes up, people feel overwhelmingly emotional to buy into the market, fearing that they're going to miss out on these massive gains, which leads to impulsive decisions such as buying assets at their peak at the top without considering long-term fundamentals or market cycle. So we can see in 2017, I wasn't here in 2017, but I can definitely attest to this in 2020 and 2021. It says in 2017, many newcomers bought Bitcoin when it was nearing 20,000, only to watch it crash shortly after. So we all hope that Bitcoin will continue to appreciate over the years. Some people don't care about the ebbs and the flows. Some people don't care that it went from 20,000 down to 3,000. Now it's at 100,000. Some people don't care that it's almost at 100,000 right now because a lot of people think it's going to 1 million. So when it comes to that, it's kind of like a double edge. Sometimes it's good, sometimes it's bad. But me personally, I always try to find the best possible entry on whatever asset I am doing. And when I see a lot of people talking about it, when I see news outlets, when I see people, your barber talking about it, and people who usually don't talk about crypto talking about crypto, I kind of get a little bit weary about buying around those areas because that's just FOMO, the fear of missing out. Like I said, or like we're going to say, what we want to do is we want to stick to a predefined investment plan. So sticking to that predefined investment plan may mean buying. We're going to stick to Bitcoin, this specific analogy or this specific example, maybe just buying every week, maybe buying every month, or just putting in when you get a little extra money, not really concerned about that price when it does go up or when it does go down. Me personally, I like to buy when it goes down more so than when it goes up. So my FOMO is to the downside. When it starts to crash and when it starts to go down, like in the bear market, I was like in a frenzy to buy. I was in a frenzy to buy some of these altcoins as well. And it definitely has played out. And then you also have to remind yourself that markets are cyclical and opportunities will come again. And this is key. This is really, really key that I really try to tell people in my community, and I really try to tell people who are in crypto that these opportunities, let's make this a little bit bigger. There's always opportunities in the markets. No matter if you're in the stock market, no matter if you're in crypto, there will always be some sort of opportunity in the market. And if you miss something, there will always be a pullback. Nothing goes up forever. Nothing goes up forever. And then let's say you do buy a top, which you can't tell if it's a top or a bottom for the most part, but you can definitely tell when FOMO is kicking into these markets, when the animal spirits are full-fledged. Just I kind of just step back and I remind myself, okay, because I get FOMO too. I know the best of traders, the best of investors, a lot of them probably still get FOMO as well. So what I always try to tell myself is these opportunities will come again. When will they come? That's the question, but these opportunities will come again, or there will be more opportunities. So me, I'm trying to really get as much bang for my buck. So I always buy the red, sell the green. That's really what I really like to keep preaching to myself first and foremost, and then I like to preach that to my community and people who ask me tons of questions. And it says conduct independent research before making any decisions. And this is going to go into my point number 2. But you always like me, I am a crypto influencer. I'm a financial bro or whatever you want to call us. But you must do your own due diligence. This really killed me last cycle, listening to YouTubers, listening to people on the internet, just listening to anybody. Before I conducted my own independent research, and before I made, or I didn't do that before I made my decisions. And a lot of times when you don't do that, you take the easy way out and you just start blaming everybody else but yourself. So you always want to do your own due diligence, basically, is what this is saying when it says conduct independent research before making any decisions. And with that being the case, when you do make a lot of money or when you do lose a lot of money, you can just hold yourself accountable for, those actions, and you can be a little bit more confident in making your decisions when it comes to the market. So that's a segue into point number 2. It's talking about the herd mentality. And the herd mentality it occurs when individuals follow the majority without critical thought. In a bull run, this often leads to a snowball effect where people pile into a coin simply because others are doing the same, which is, meme coins, basically. This can result in inflated prices and eventual crashes when the hype dies down. So that's a good and a bad thing. But the thing is, you got to be in early. You got to be in early. And that goes to my point before. You have to be doing your own due diligence, and you have to be doing your own independent research before conducting these decisions. So it does help to be following a lot of people who are up on it. A lot of people like, myself, I'm always in tune to the market. I'm always looking at what's going on, new trends and new hot coins. A lot of people can't do that. So they do look to other people. And it says meme coins are hype driven coins, which is pretty much everything, gaining popularity without utility. It came up with Dogecoin, but I think Dogecoin has utility now. So it's, sometimes AI doesn't give like super good, accurate information. I think Dogecoin has some sort of utility. It was being used in places for payments and things like that. But meme coins, like I said, definitely are at the top of the list when it comes to these herd mentality. And a lot of times people get into these meme coins or any coins because an influencer talked about it or because everybody's talking about it, only to buy the top and see their investment go down. And 9 times out of 10, you're going to panic sell when that goes down. And, the asset may never go up again. So it's a really tough thing that you have to navigate in crypto. Like I was talking to one of my guys, man, crypto is the wild, wild west. So you really have to be in tune to what's going on and actually know what's going on. You may get lucky a couple of times, but for the most part, if you want to make long lasting money in crypto, you definitely have to do your own due diligence and not really have a herd mentality. You want to get in early. That's the key to crypto, is being early. Avoid basing decisions solely on social media trends or influencer advice. So usually when they're on social media, when a coin is being talked about on social media or influencers talking about it, you're probably a little bit late to the party. So I wouldn't say avoid it, but I would definitely say be cautious in decisions when you look at social media trends or influencers talking about it, because some of us talk about stuff early. Like I talk about stuff early. I may find something and then I'll talk about it a little bit early before the mainstream is talking about it. And then once the bigger influencers, everybody's talking about it on TikTok or something, you're kind of late. So you kind of want to be careful with that. Evaluate whether the asset has real world utility, strong fundamentals, or development activity. So this one, it's kind of like a toss up because crypto is basically all speculation at this point. Most coins are not doing anything in the world. It is all based on speculation and based on future things or what it can do, not what it's doing. So you just want to be careful with those few points and the herd mentality. Number 3, euphoria and overconfidence. So I definitely want to talk about this euphoria, man. Whew, this is one that I still struggle with at times. It says a bull run often brings euphoria as portfolios grow rapidly. Yes, they do. This emotional high can lead to overconfidence, one of the worst things that you can do, causing investors to take unnecessary risks, such as leveraging heavily, neglecting diversification, or failing to set stop losses. Now, this is key. This is a good one. This is a really good one. So when my portfolio was up massively last cycle, I can attest to this. When I started taking unnecessary risks, it felt like I couldn't miss. It felt like every coin that I was buying was going up 2, 3, 4, 5, 10x, 20x. So then I started to get a little bit more frothy. Then I started to get a little bit more overconfident, and some of those coins start going down very much. I started using higher leverage. I stopped sticking to my plan. First, I was doing, a little bit of leverage here and there. I didn't really know how to trade then, but I was learning. But like I said, I started to use more leverage because it was like I couldn't lose. So there came that euphoria and that overconfidence, and that really took a lot of my profits away. Starting to leverage trade heavy, such as like I said, leveraging heavy, and I really lost a lot of money that I should have kept last bull run. Even this bull run, I really have been really sane when it comes to coming to euphoria or overconfidence. I've really been a little bit too uneuphoric or too underconfident. So I want to just something in the middle that you really have to get to. You have to get to that middle ground and try to not to be too emotional about it. We are human, so we will get emotional about these things, but for the most part, it's not really too much that you can do when it comes to being overconfident or euphoria. You just have to try to tame that beast. You really want to try to tame that beast. And that's what I really try to do when it comes to these bull runs, or when it comes to like that month that when we got when the president came in until like the month. So about those 30 days, 30, 45 days when everything was just going up, I was kind of getting a little bit euphoric, but then I took a deep breath and got back to my strategy and stuck to what I believed or what I was doing over the past few months while the market was not even really going up like that. So key risk of overconfidence, believing the market will only go up. We just talked about that, and ignoring potential corrections. We always want to be cognitive of these potential corrections that can happen. Like right now, a lot of these coins are down 40, 50, some 60%. Bitcoin is down maybe about 20%, but a lot of these altcoins are down a lot. And some people are panicking while others think it as a correction. Some see it as an opportunity. So you definitely want to not ever think the market will only go up forever. Holding assets for too long without taking profit. So this is the number one thing that I preach. Take profit. So I talk about it and I say pay yourself. That's what I really say. I say pay yourself. So because when you pay yourself, when you say I'm paying myself, psychologically to me, it seems better than taking profits because I don't know. I just like the way it sounds better. So I have been taking a little bit, just small things in 2024, but 2025 I will be taking a lot more profits off the table as my thesis plays out. We'll talk about my thesis at the end, so make sure you stick to the end of the video. Stick to risk management strategies, only allocating a small portion to high risk plays. That really equates to meme coins. So even with me right now, I'm only using meme coins as I'll take some little bit of profits from something and I'll put a little bit into meme coins, hoping I can turn 100 into a million. Hasn't happened yet, but I have had some good plays, and I have had some that went to zero. So that's really what I've been doing with that. And it says regularly take partial profits to secure gains while leaving room for upside. So I think Wendy O usually talks about this, leaving that moon bag for the upside. Now I don't like taking too much profits too soon, but trying to time them tops is darn near impossible. So you definitely want to take partial profits on the way up. Number 4, we want to talk about cognitive bias or confirmation bias. So it says seeking information that validates your bullish outlook while ignoring contradictory evidence. So I see a lot of influencers. This is confirmation bias. I mean, I can look at the chart. If I'm bearish going into looking at a chart or looking at something, I can find bearish things. If I'm bullish, I can find bullish things. So seeking information, you always want to, me personally, what I do is I usually look at people who are mega bullish, and I usually look at people who are mega bearish. I don't look at too many people, but have your bears, your perma bears, and you have your perma bulls. And then I try to, like we talked about earlier, doing my own due diligence and doing my own homework, and then coming up with even analysis, even unbiased analysis when it comes to these markets. So that's basically what I do. I try to stay even or stay in the median or the mean or the in the middle, so I can have a clear judgment when I'm making my decisions. Recency bias, believing that recent price movements will continue indefinitely. We kind of touched upon that, talking about the market going up. We thinking it's going to keep going up, and that goes to the downside as well. Like a lot of times, the price is going down, like in the bear market. A lot of people just said, we're going to this, we're going to 15, and we're going to 10, we're going to 12, we're going to 5, we're going to 3, we're going back to 3K. So believing that recent price movements will continue indefinitely and not switching when the information calls for switching. And this is what a lot of people get mad at influencers about and get mad at people who talk about these things, because like I could be saying something on Monday, and if something changes, I'll flip just like that on a Tuesday. And that's what happens. I'm very fluid in the market. So I try not to have confirmation bias. I try not to have recency bias. I don't like to flip flop like too much, but if the information calls for it, then I will switch and I will be fluid, like I said. Then we have the bandwagon effect, assuming something is a good investment because others say so. And this is just goes back to not doing your homework, listening to influencers wholeheartedly, and just doing your own research, man. Doing your own research is the number one thing that I think somebody can do. As much as you can do, make sure you do it if you want to make these decisions, make pretty good investment decisions in this market. So how to address these biases? Number one, you can write down your rationale for investments and review them periodically. So if you have a list of coins that you buy or you want to buy, you can write it down, write down why. And, if the price goes down, you have your conviction there, you wrote it down, you figured out your strategy, your plan, and you want to stick to it. But if something happens, you can be fluid, like we just talked about. And sometimes it's good to cut your losses, but you want to write down, or you want to always have your rationale on your own personal opinions or your own personal investments or your own personal homework or education as to why you got into a coin or why you got into some sort of project or things like that. Consult diverse sources of information, including bearish perspective. So we talked about that, getting some perma bulls, getting some perma bears, and then trying to meet somewhere in the middle. So that's definitely what I do. Definitely always try to stay somewhere in the middle so I can have a clear and concise plan when I go into looking at charts and when I go and just looking at the market overall, man. So number 5, I think this is the last point that I'm going to talk about my thesis going into 2025. It says the importance of a clear plan. Now, this is very, very important. This is very, very important. Let me actually make myself a little bit bigger. This is super important because most people come to crypto with no plan, me included. I came to crypto with no plan. I had no idea what was kind of going on. This was in early 2020. I had no plan. I had no plan to take profits. I was just willy-nilly in the market, looking at prices go up, being happy, euphoria, everything that we talked about before. And I had no plan. So it says without a strategy, this is the case with anything, 2025, whatever you're doing, without a strategy, emotions can dictate your actions, often to your detriment. A clear plan provides structure and helps you make rational decisions. And that's what you want to make in these markets, man, because the markets are irrational. So you want to make rational decisions in an irrational market. That's the key to crypto, making rational decisions in an irrational market. So if you can kind of get to that, you can't really always master it because the market moves so quick and the market can flip in the drop of a hat. But you want to do your best to make these rational decisions, like I said, in this crazy wild, wild west irrational market. What a good plan includes, let's make this a little bit bigger again, entry and exit strategies. This is what we talked about and what we've been talking about since the bear market. Me and Rob over at Digital Asset News have a good video. I will link that in the description below, talking about bull market tips. It says define your target buy and sell prices based on research, not emotion. So a lot of times in crypto, we have price discovery. So it's hard to say where you're going to sell, but you can definitely have some sort of areas as to how much percent from your initial entry that you want to start selling at. Not necessarily prices, specific prices, but definitely, how much percentage or how many X's you are up in your investment. So that's what I would say about that. Risk tolerance: decide how much you're willing to lose and avoid investing money you can't afford to lose. This is like the cliche thing we all need to say. We all say, like, don't put in more than you're willing to lose, and this and that. Like, that's true, which I do agree, and I say it all the time. But sometimes you got to swing for the fences. I preach base hits, base hits, base hits, but sometimes you got to swing for the fences. But that's where all those tips from above come in, talking about doing your own research, not getting FOMO, not listening to everybody, having a bullish and bearish bias, recency bias, and things like that. Once you accumulate all those things, and once you can handle all those that we talked about above, deciding how much you're willing to lose and avoid investing money you can't afford to lose will make it a lot easier. But sometimes, once you do research and you only got, let's say you got $1,000 left, and you're really confident in the research that you did, and everything is lining up, sometimes you got to swing for the fences, man. Swing for the fences. No risk, no reward, man. Portfolio allocation, balance between high risk, high reward. Right here, balance between high risk, high reward assets, stable long-term investments. So a lot of my investments are short-term swing trades, so to say, with most of it going back into Bitcoin, like I said, and some fiat. So 2025, that's what we're going to do. We probably might hold it depending on how the market goes, but for the most part, like I said, most of it will go back into Bitcoin when I do sell, and a lot of it will come out to fiat. Long-term mindset. And when I say long-term mindset, when I see this, I really just think of Bitcoin, because I think Bitcoin is the savings account. I think Bitcoin is going to $1 million. How long it takes to get there is the question, or is the $1 million question. But I do think it's going to get to those astronomical numbers that we all talk about. Since understand that corrections in bear markets are inevitable. So when it comes to corrections in a bull run, I use those as opportunities, and in the bear market, that's when we're really accumulating these coins or Bitcoin or whatever it is that we think is going to come back. And it's been coming back. Bitcoin has came back after every bear market with stronger growth, higher numbers, higher price targets. So I think it's going to continue. I do think the floor may be a little bit higher when it comes to the bear market, but I think we're inevitably going to go to those numbers, those high numbers that we talked about. Focus on the bigger picture. And this is really, I want people to listen to this. Focus on the bigger picture, such as growth of blockchain technology and adoption over years, not weeks. So once you can really think about it in this aspect, especially for Bitcoin, you don't really give too much concern about these ebbs and these flows in the market. Blockchain is a new technology. It's not that new, but when it comes to integrating crypto with the blockchain technology and all the things that I see coming over the next few years and all the adoption that's happening now, we have pro crypto presidents, pro crypto nations, pro crypto entities, we have ETFs, just all the adoption that's happening that's really just happened over the past year or so. So I think this will continue. So I want everybody to really focus on the bigger picture and not just what's happening over the the few days or the few weeks, unless you're just trying to come in and make a few quick bucks here and there. But like I said, Bitcoin is the one that I'm going to be holding for years and not weeks. Some of these altcoins I will be holding, like I said, but I think a lot of these altcoins will stand the test of times. We got XRP been standing the test of times, Dogecoin, Ethereum, and I think more and more will stand the test of times going into the next 2, 3, 4, 5 years. So not only is Bitcoin, of course, is the safest play. Like I said, some of these other coins will stand the test of time. So I will be looking at that from a long-term perspective about the growth of the technology and adoption over the next few years and not weeks. It says, by addressing these points, you can help your audience navigate the emotional and psychological challenges of a crypto bull run. I think that's what we did. That's what we did, man. I really think we touched some good points. And this goes along with my thesis. And my thesis is, coming into 2025, I don't know how these first couple weeks are going to play out. not strategically, historically, we have seen Bitcoin. We have seen a good run in Bitcoin, but we really saw altcoin season start in Q1. So I don't know how we're going to fare or how we're going to come into Q1, maybe the first week or so. But I do think that we will start to run. I do think we will start to run hard. I do think Ethereum is gonna start running hard, which will catapult or start off the real altcoin season. And then I think we have Q1 maybe going into a little bit of Q2 to make as much money as we possibly can, because I think a lot of things will start to happen in the economy. So I really want to be a very defensive when it comes to the end of Q1 going into Q2. I mean, I hope we just keep going up forever, but I know that's not the case. And I do know things will happen that will pull us down. How far to pull us down is the question. But I'm using every opportunity, like especially with crashes. I'm using all those opportunities as buying opportunities. Short term, of course, for altcoins between now and maybe the beginning part of Q1, Bitcoin forever. Forever. As long as Bitcoin is around, as long as Bitcoin goes up and keeps crashing, I'm going to keep buying the dip, because I do think right now we're at 93K. I think we're going to 200, 300, 500, $1 million. I just hope some of my knowledge, if you've been watching my videos over the past few months, see, we've been making some pretty good calls. We've always been keeping an even keel when it comes to the market, not really getting too emotional to the upside or the downside. And we're just trying to change our lives, man. And whoever's watching, hopefully you guys can take heed, and hopefully I can help in your journey as well. And you guys can help me in my journey as well. I read all my comments on every platform that I'm on. I appreciate everybody for watching, and appreciate everybody who always comments. And I get a lot of comments about new coins and new things that's going on that I don't know about. So it's a give and take, type of relationship that I have with you guys, and I appreciate it. So hopefully this video helped you a little bit, just to go over some points to get ready for 2025. Like I said, I go by FD White. Make sure you like, make sure you subscribe. I think we have a good 2025, early 2025 coming. Hold the fort. 93,845 is where we are for Bitcoin right now. I do think we're going to hit some more all-time highs. So I'm positioning myself for that scenario. And stay tuned, because I've been updating the community heavy over these past few months, and I will continue to do so in 2025 and even go harder. So I will talk to everybody in the next video. Peace.